How did financial chaos lead to the Bank of England's creation? Imagine a time when the economy was like a house of cards, constantly wobbling and ready to fall. That chaos was a big reason why the Bank of England was created. Back in the late 1700s, England faced many financial problems. Banks were small and often unstable, issuing their own banknotes without any central authority to oversee them. When a bank failed, it caused panic and wiped out people's savings. The government struggled to raise money during wars because private lenders hesitated to lend in such uncertain times. This led to a crisis where the government needed a reliable way to borrow money and keep the economy stable. The biggest trigger was the war against France. The government wanted to borrow a large sum to fund the military efforts, but private lenders were wary because of the shaky financial system. The government needed a trusted institution that could lend money and help control the money supply. That is when the idea of creating a central bank took shape. The Bank of England was established in 1794 as a joint stock company. It was given the right to issue banknotes and lend money to the government. This made it easier for the government to finance wars and manage public debt. Over time, the Bank of England grew into the main financial institution in the country. It started to take on more responsibilities, especially after facing several financial crises. For example, the Panic of 1825 and the collapse of Overend Gurney in 1866 showed how important it was to have a lender of last resort. The bank could step in during bank runs to provide emergency funds and prevent the entire system from collapsing. The Bank Charter Act of 1844 was another big step. It restricted the issuance of banknotes to the Bank of England, making the currency more stable. This act helped centralize control over money and reduce the risk of smaller banks issuing too many notes. It was a move toward creating a more organized and reliable financial system. In short, the chaos of unstable banks, failed institutions, and risky investments made it clear that England needed a central authority to keep the economy steady. The creation of the Bank of England provided a way to manage government finance, issue currency responsibly, and act as a safety net during financial crises. This set the foundation for modern central banking and helped stabilize the financial system for centuries to come.